Veteranpoolen Q4 2025. Veteranpoolen once again delivered strong results and shares was rewarded by the market. The company now trades at nearly 60 SEK per share, slightly above 20 times earnings. For the Q4, the company grew 21% in terms of revenues and earnings grew 55%. For the full year, the company grew 16% and earnings grew 30%. This looks like absolutely fantastic numbers, as Veteranpoolen has grown revenues around 10% per annum in the past. Make no mistake, this is above the normal growth rate for Veteranpoolen and is unfortunately not due to a permanent change within the business. The primary reason for the strong growth was favorable tax reductions within Veteranpoolen's core markets. This means that we have seen a pull forward of demand, artificially boosting the numbers of the company. We can expect to see some backlash in 2026 as a consequence. With the improved results, we have also seen an increase in the multiple that the market has been willing to pay for the company. For me, this is a dangerous milkshake. Potentially peak earnings combined with a peak multiple. In the past, I have said that 20 times earnings is warranted for Veteranpoolen due to their capital-light business model and expected growth rate. However, this is with a normal earnings base. The 2025 numbers are boosted due to the favorable tax regime, which has now changed for 2026. For 2026, I think growth rates will stall, margins will compress somewhat, and revert towards the mean. When this happens, the market typically won't pay a strong multiple on the earnings. Despite being very positive about the future prospects of the company, I believe the share price might be elevated in the short term. Perhaps the market is prepared for the slower growth, but I am skeptical. Due to the mix of a temporarily elevated growth rate combined with a higher than average earnings multiple, I believe the setup is difficult for shareholders. Around 60 SEK per share, I foresee a very lumpy 2026. With a pullback in the stock towards 15 times earnings, I will look to get back in the company. I owned shares in the past, but have sold off the company due to the rapid appreciation, above what I deem to be a fair multiple for the stock. This is despite being positive for the long term. At 60 SEK per share, the shares trade above 20 times earnings and at a 5% free cash flow yield. My long-term growth expectations are around 10%. Therefore, the risk-reward is not there for me at the moment. This is not financial advice. Thanks for listening.